So in this video, we're going to look at the top 5 performing stocks in the Qs today and the bottom 5 performing stocks in the Qs. We're going to go through some things. We're going to look at quant scores. We're going to look at 2 different types of earnings models. One's just a growth earnings model. The other one is a valuation earnings model using corporate bond rates to get a acceptable price today. We'll look at technical analysis and we'll see if it has relative strength versus the market. We're going to look at the top 5 and bottom 5 performing stocks in the Qs, and I'm going to try and get through each one in a minute or less. So let's get right into it. To make this video about 10 minutes. The first one we're going to look at is Team Atlassian Corporation. It has a $64 billion market cap. It has a forward PE of 60 times. It's just about in line with the Qs. We're comparing it to the Qs for relative strength using the RSI 14 for both the Qs and the stock ticker. It has a 30-week high of 287.97 and a 30-week low of 135.29. It's 45% off its 30-week low and 17% off its 30-week high. We are a current price of 245.77 with a present value of 126.77. And then for the valuation model, it has an acceptable buy price using a 15% discount rate of 86.86. This model here at the top, the growth model, we use the growth rate that's given to us, and then we cut it in half for the first 5 years and then cut it in half for years 6 through 10. And then we take a 15% discount rate and we use a 15 terminal multiple to try and get a price back to today to see if it's fair value. So on both valuation models, it's overvalued. It's on the lower end of the neutral zone for the quant score. And however, it does have good technical analysis. If we look at the medium to long-term trend with the 30-week moving average, we are trending up and above it. However, we pulled back. But on Friday, we closed at 242. Today, we're at 246.72. And our resistance is 273.58. Our support is 182.26. A 5% stop loss below support would be 173.15. The next stock that we'll look at today is PayPal. That is got a PE of 20.82 with a forward PE of 17.60, a PEG of 1.73. Has slight relative strength versus the Qs on the RSI 14. We are overvalued slightly, but not by a lot, just slightly under 11% for this model. And then we have an acceptable buy price of $63 for this model with a current price of 87.16. We do have a really good quant score here of 94, so that bodes well. So when you have a quant score like this, maybe you're willing to pay a little more premium for the stock. We have good technicals as well. We are in an uptrend above our 30-week moving average. On 2 Fridays ago, we closed at 87.60. This past Friday, on January 10th, we closed at 83.36, and now we're back up to 87.16. So money's coming right back in after a little dip this past Friday. But it is only Tuesday, so we'll see what happens the rest of the week. We have resistance at 89.50 and support at 79.04, with a 5% stop loss would be 75.09 below support. Now we're looking at Constellation Energy. We have a PE of 31.89 with a forward PE of 31.55 and a PEG of 2.5. We do have some relative strength against the Qs. Our RSI is 67. We have in our earnings model, we have a current price of 289.61 and a present value of 152.20. An acceptable buy price for this valuation model here would be 123.33. We have a quant score of 88. We have 2 things we're not getting: the beta and the price of free cash flow. If I took those out, it'd probably be about 86. It'd probably be roughly the same because we don't have one, we get 100 for the other. So it's getting a buy rating based on our quant score. We are above our 30-week moving average. A good time to buy this would have been on the 27th when we hit our 30-week and then bounce right off of it. We had some weeks of selling here, and now we got buying come back in. But this past Friday, we closed at 305.19. Right now, the price is currently at 288.78. So we are getting a little bit of a pullback at the moment. We'll have to see if we get more pullback or not. However, we did break the resistance level of 286.96, so this could become support. And our support level was 225.95, and a 5% stop loss below that would have been 214.65. When we went up on that to 280 to 305, we went up on 1.88 times relative volume. Now we're going to look at CDW Corporation. We have a PE of 22.79 with a forward PE of 18.55. We do have some relative strength versus the Qs here. We have a present value of 103.09 and a current price of 186.41. an acceptable buy price on this valuation model of 74.46. So both of them rate out as a sell on valuation. We're just into the buy zone for our quant score, and we are our technical analysis. We have broken down. We're well below our 30-week moving average, and well, not too far, but we are trending down. This chart right here is 30 weeks of the 30-week moving average. The red line is the 30-week moving average. The orange line is the price, the close price for each Friday. And we are trending down and the price is below it, but only 9% below the 30-week and 12.29% below the 40-week. We have resistance at 220 and support at 174.86. We haven't broke support yet. A 5% stop loss below that would be 166.11. If we look here, even though we're below the 30-week moving average, we are starting to trend back up. We were at 174.53. On December 20th, and then December 27th, 175, then 174. So it didn't kind of go anywhere. And now last Friday, it closed at 183, and now we're higher than that. So it'll be interesting to see where this closes this week to see if money's going to start trending back into this stock or not, or if it'll get rejected here at this 30-week moving average. Just something to keep an eye on. Now we're looking at Charter Communications, which is the 5th best performing stock of the top 5 today. And this one actually rates out the best on valuation. We have a PE of 10.86 with a forward PE of 9.66 and a PEG of 1.13. That's cheap on all of those bases. We're slightly under the market for strength with 37.72 RSI versus 39.54. However, our valuation, we have a current price of $346.03 with a present value of $477.19. So this could suggest that this is cheap. Even on this model here, we get a buy rating with a acceptable buy price of $383.38. And this model is much more difficult to get a buy price on than this one is, because we're factoring in the corporate bond yields, and the corporate bond yields are high right now. We have a quant score of neutral, more towards the negative side, but neutral. If this starts to have, if it starts to grow its earnings and brings that to the bottom line, all this could increase and get better. So that's something to keep in mind. We are 0.36% below the 30-week moving average, and we were further below it last Friday. And now it looks like we're trying to cross back above it, and it is trending up. This looks like a great opportunity for a stock to, maybe if you're a swing trader or an investor or a momentum investor. We were at $403 on 12.6, and now we're all the way down to $334. So there's a lot of upside here, and you could put stops in real tight because we're right near the 30-week moving average with little downside. And if your resistance is 397.91 and your support is 325.99, and a 5% stop loss below support would be 309.69. Okay, the next one, we're going to start looking at the bottom performing stocks in the Qs today. And the first one we're going to look at is Illumina. We can see this has a no PE, but a forward PE of 31.16. We do have some relative strength versus the Qs. The current price is 136.24, a present value of $68.99 for this model, and a acceptable buy price of $56.03 for this model. We're using a 15% discount rate on both models. If we look at the quant score, we have a neutral. However, we do have good technicals. We're up and to the right, and we're close to the 30-week moving average. So this is also, if you believe in this stock or this pullback, this could be a good entry. We're only 3.66% above our 30-week moving average, just trending up. So we've just pulled back. This could be for swing traders or momentum investors. We're 7.91% above our 40-week moving average. We have resistance at 148.97, support at 135.44, and a 5% stop loss below that would be 128.67. Now we're going to take a quick look at Biogen. This is undervalued. We are trading at 12 times, a forward P of 8 times. However, we do have a PEG ratio of 3.24 times. We have relative strength on the RSI 14 versus the Qs, but on our growth model here, we are undervalued. We have a current price of 143.06 with a present value of 169.95. So there is upside based on that. We have a very good quant score for this in the 90s, so that gets a buy rating. And we have, however, our technicals are really bad. So if you're a value investor and when everyone is going against it and you want to buy it, this could be for you. We do have an acceptable buy price of 122.76 for our valuation model here for our earnings, but the technicals are bad. And if you, like I said, if you're a value investor, this could be something that's for you. But if you're a trend investor, you don't want to get into this. If you're waiting for a turn, you want to see the 30-week moving average turn up. You want to see the price turn up. We're still even down from Friday's close. So right now it's still just falling. We went from 152.21 2 weeks ago to 148.28 on that Friday, on January 10th close, and now we're at 143.06. So we don't know where it will stop. We have to see where it's going to stop. We broke through support at 148.44. We'd have to get up to 188.07 for resistance. So there's a lot of upside to resistance. 141.02 would be a 5% stop loss below support. So we're already below support. I would just wait on this one, but it's, if you're a value investor, the valuations do look good. Next one we'll look at here is Regeneron Pharmaceuticals. We have a PE of 17 with a forward PE of 15.37, a 2.85 PEG. We have some relative strength, the RSI 14 relative strength for Regeneron versus the Qs over the last 14 days. We are overvalued slightly here at 26%. Little more than slightly. Present value of 510, current price of 690.87, an acceptable buy price for this model here of 391.66. However, we get a very good quant score, so you may be willing to pay a little more for a company that has good business metrics and other valuation metrics. Our technicals are terrible. They're 28% off of our 30-week moving average, 28% off of our 40-week moving average to the downside. We have resistance at $1,006 and support at 703.71, and we broke through that. And our next level of support for the stop 5% below that support would be 668.52. So we broke support, but we're not quite to the 5% loss if you were putting a stop loss in on support. But I wouldn't be betting on this one because we have a curling down 30-week moving average and a price that's breaking down. So I would wait until I see a turnaround. And we have 698.88, 718.15 was the close 2 Fridays ago, then 696.88, and now we're at a price of 690.87. So this is just trending down still. So now we're going to look at Lululemon. We have a PE of 28.08 with a forward PE of 25.41 and a PEG of 2.78. We have relative strength versus the Qs. We're getting into overbought territory. This has a present value of 215.49 with a current price of 388.74, so we're about 45% overvalued. However, we get a very good quant score. We are also overvalued on this model here with a 174.33 acceptable buy price. We have been in a downtrend for a while here. You can see the 30-week moving average was trending down, and then we broke above it, and we've been above it since. We are about 27% above it right now, so any pullbacks could be an opportunity if you're a momentum investor. We have resistance at 395.57, so if we break that, it could be going higher. And you can kind of see we have like a little bit of a consolidation right here, so that's probably just breaking. If we were to draw a line right across here, it would be breaking out to new highs. And when you break out to new highs, you lose all the sellers because nobody has bought up here yet, so it just keeps going until it doesn't. And then we have support at 280.09 and a stop loss 5% below that would be 266.08. And if we look at the last Friday's close, that was 395.47. We're slightly down from that, but 2 Fridays ago, we're up from that. And 3 Fridays ago, we're up from that slightly. So it's kind of bouncing around in this range. And you can see we're range bound right here. And that could be considered maybe a double bottom if you look at that right there. And then we could just be off to the races. If you're looking for technicals for trades. And the last underperformer today that we'll look at is Meta, and that has a PE of 28 times with a forward PE of 23.46 times, a PEG of 1.65, 58 RSI 14 versus a 39 RSI 14 for the Qs. It's slightly overvalued at 12%, so that's not too bad, especially with the business metrics we're getting here. We have a present value of 519.39 with a current price of 594.25. On this model here, we get an acceptable buy price of 407.78, which factors in our corporate bond yields. Our technicals are very good. We're up and to the right, and we are holding the 30-week moving average. We came below it once here over the last 30 weeks, and we're only 7% above it right now, so we're not extended. So your downside if this holds the 30-week as it did in the past, your downside is 7.75%. We have resistance at 619.99 and support at 560.13. 5% stop loss below that support would be 532.12. That's all I got for you today. I just wanted to go through the top 5 stocks and the bottom 5 stocks in the Qs and do some little quick analysis on it and determine if they look interesting to you or not. None of this is meant to be a recommendation. I am not a financial advisor. This is just for educational and entertainment purposes only. If you found that video helpful or valuable, I'll consider hitting the like and subscribe button, and thank you for watching.